I've owned a property since 1998, rented it in the 2000s, and I bought it for £70,000. I'm now looking to sell it for £400,000, but I'm worried about capital gains tax as it's quite horrendous at the moment. Hi, I'm Patrick Henry and I'm answering your property related questions. First of all, congratulations, you just made a hell of a lot of money. There's pretty much no trader in the universe, that I know of anyway, that's gonna make that sort of return. So, congratulations, but you're gonna have to pay some tax, okay? When the property was your primary residence, so from the time of 1998 until the 2000s that you were living in the property, you don't have to pay any capital gains tax on the increase in property value during that time. However, you do when it stopped becoming your primary property and you're renting it out. So unfortunately, there's not really a way around this if you're looking to sell the property to get all of the equity out. What you could do, however, if you don't have a large mortgage on the property, is potentially draw down your equity. In an older speak, some people used to call it equity release, which is where you basically go to a lender and say, look, my house is worth something, but I have no money. Will you give me some money to live the rest of my life? If you're not at that stage in your life, then just a typical mortgage or buy-to-let mortgage should be sufficient to draw down enough money for you to get on and do what you need to do. If not, tax has to be paid. So you got lucky with the property, congratulations, but pay your tax.